Hey guys, welcome back to another episode for Ask a CPA, and today we're diving into a topic that often sparks a lot of questions, which is the FBAR filing requirements. Now, as an American living abroad or within the United States, it's no surprise that you may have a financial bank account or investment account located outside of the United States. But did you know that simply having financial assets in foreign accounts may trigger a special reporting requirement? Well, it's true, and the main reporting requirement is known as an FBAR, which stands for Report of Foreign Bank and Financial Accounts. Now, the actual form that you will fill out come tax day is known as a FinCIN Form 114. So in today's video, we're going to look at some of the basic information that you should know when it comes to filling out an FBAR, including what is an FBAR, who's required to file an FBAR, what are the filing deadlines, what are the penalties for not timely filing and submitting your FBAR? And finally, what should you do if you have never filed an FBAR but you were supposed to? Alright guys, a lot of great information to cover in today's video. Let's go ahead and jump into it. So what is an FBAR and what does it mean? So an FBAR is another name for FinCIN Form 114, formerly called Report of Foreign Bank and Financial Accounts. And it's used to report foreign financial accounts that held a combined amount of $10,000 or more at any point during a calendar year. Now, the FBAR exists to combat tax evasion, specifically by having U.S. citizens report money and assets in non-U.S. banks. Rather than filing with the IRS, you submit an FBAR to FinCIN, the United States Treasury Department's Financial Crimes and Enforcement Network. Now, failing to file means facing heavy penalties, so it's always in your best interest to stay up to date. Most expat tax filers will just report the balance in their foreign bank accounts, but you may also have to report the following asset classes. Now, first, foreign assets like stocks that are held in foreign financial institutions. Next, assets in a foreign branch of a U.S. financial institution. Next, foreign mutual funds, life insurance policies, or annuity contracts. Next, foreign retirement accounts. And finally, accounts that you don't own, but you have a financial signature authority or are able to control. So who files an FBAR? So U.S. persons, including U.S. citizens, green card holders, resident aliens, and dual citizens are required to file an FBAR if the combined balance of all of your foreign accounts you own or have financial interest or signature authority in is more than $10,000 at any point during a calendar year. Now, this is true regardless of whether you lived in the United States or abroad. Financial interest is determined based upon who is the owner of record or legal title. Now, signature authority means that you have some level of control over the disposition of assets through direct communication with the institution. For example, if you're a signatory on an employer's foreign bank account, you have signature authority and you should report an account on your FBAR. Now, foreign financial accounts include bank accounts, security accounts, and certain foreign retirement arrangements. Accounts located outside of the United States, Washington, D.C., and U.S. possessions and tribal territory are considered foreign accounts. Now, what is the FBAR filing deadlines for tax year 2023? So the FBAR is an annual filing, and if you want to avoid penalties, make sure to file your FinCIN Form 114 by the due date. Now, the FBAR 2023 tax deadline is the same as your income tax return, which is usually April 15th, with an automatic extension to October 15th. So what happens if you don't file an FBAR when you are supposed to? In short, the answer here is penalties, and big penalties. Unless you're trying to evade taxes, there really aren't any disadvantages of filing the FBAR. Not filing, however, will cost you. Under the current rules, if you're required to file, but either you do not file on time or you do not correctly report your foreign accounts, you can be subject to FBAR penalties of up to $10,000 per violation, even if you didn't know that you had to file. Now, the penalties are much steeper if you knowingly fail to file. If you are aware of your requirement and you do not accurately file, or if you don't file on time, you could be hit with a penalty upwards of $100,000 per violation, or even higher depending on your account balances at the time of the violation. In the end, it just makes financial sense to stay in compliance. Now, if you've never filed an FBAR and you were supposed to, don't panic immediately. There's a process called the IRS Streamlined Filing Compliance Procedures that can help you get caught up on your FBAR filings without significant penalties. Now, these streamlined compliance procedures allow Americans to get caught up on past FBARs without penalties. Now, if you can qualify for the streamlined filing, we recommend that you take advantage of these procedures immediately. Penalties for delinquent FBARs range anywhere from a few $100s to a few $100,000 for serious offenders. Now, if you need to catch up on multiple years of FBARs, I highly recommend that you contact a CPA with experience in filing these streamlined filing compliance procedures to get you back in good standing. And there you have it, folks, the FBAR filing requirements broken down for you. Remember, when it comes to financial matters, it's always wise to consult with a CPA or tax professional to ensure compliance and avoid any pitfalls. Thanks so much for tuning in to today's videos. If you have more questions, make sure to drop them in the comments down below. And don't forget to hit that like button and share this with anybody that you know that may have foreign bank accounts. Make sure to hit that subscribe button for more helpful tips and tax and accounting information. Until next time, guys, take care and we'll see you in the next video.